DSCR loan rates and conventional mortgage rates barely moved this week. The 30-year fix crept just 3 basis points higher from 6.29 to 6.32%, putting the DSCR loan rates at approximately 7.07% for top-tier borrowers. Just 10 years ago, guys, 10 years ago, investors were locking nearly the same loan at roughly 3.6%. So what changed and what would it really take to get back there? Stay until the end. I am going to show you exactly how choosing the right property type can lower your DSCR loan rate by 25 to 50 basis points, even when the market itself refuses to move.
The flatline nobody expected. Why the quietest week in months is your loudest signal.
Mortgage News Daily's 30-year fixed index locked into a band of 6.32% to 6.33% from Monday through Thursday, a range of just 1 basis point across 4 trading days. That is not a coincidence. That is a market that has found a temporary equilibrium. And according to MND's own April 19 commentary, this ultralight range represents the lowest the index has been in over a month. The bond market wasn't reacting to the new data. It wasn't pricing in fear. It wasn't sitting still. And still is actually something. When rates stop swinging, deal math stops moving. And that means you can underwrite your next rental property acquisition with a high degree of confidence that the coupon you see on Monday is going to look almost identical on Friday. In a market that spent most of 2025 giving investors wish splash, 4 days of stability is a green light for a pipeline execution, not a reason to wait.
The jobs report nobody talked about. Why 214,000 claims is quietly bullish for rental investors.
Initial jobless claims for the week ending April 18 came in at 214,000, up 6,000 from the prior week's 208,000, with a 4-week moving average of 210,750. That is a mild tick onward, but the word mild is doing a lot of work here. The labor market is cooling very gently, not cracking. Unadjusted claims actually fell 4.5% week over week, and the seasonal adjustment simply expected a larger drop. So the increase is partly a statistical artifact. Markets read this correctly. The data confirmed the existing narrative of steady growth, and treasuries didn't flinch. Tenants still have jobs, rents are still getting paid, and the economy isn't running so hot that the Fed feels pressures to push rates back up. The 214,000 number isn't a warning. It is confirmation that the housing demand floor is intact.
DSCR loan rates today versus 2016. Why 3.6% requires a crisis to return.
Right now, the average 30-year fixed is hovering near 6.3%, while a decade ago in 2016, borrowers were paying closer to 3.6 to 3.7% on the same product. That gap isn't a mystery or a conspiracy. It is the math of Fed fund rate that now is at several points higher. Inflation that ran hot after COVID, and bond investors demanding a bigger premium to hold long-term debt. To get back to those 3-something mortgages, you would need a world where inflation is durably at or below 2%, the Fed funds rate slides back towards 1% or less, and markets stop demanding extra yield for long-term risk. In other words, 3.6% isn't impossible, but it would likely come with a very different economic backdrop than the one today's DSCR investors are actually investing in.
Your move. Lock now or keep waiting for a rate drop that may not come.
Now, let me unpack the strategy I promised. Choose lower risk property types. Most investors don't realize that the property itself, not just their credit or down payment, directly affects how DSCR loan gets priced. Single family homes consistently price better than condos. 2 to 4 units properties or anything the lender considers non-standard. Why? Because lender assign risk as the assets level, not just the borrower level. A clean single family rental in a liquid market is easier to underwrite, easier to sell in a default scenario, and therefore gets a more favorable coupon. In a flat rate environment where the market isn't handing you free basis points, simply targeting single family assets over condos or multi-units properties can be the difference between a 7.25% rate and 6.875% rate on your next DSCR loan. And that spread compounds into real money over a 30-year term. If you want to explore other strategies that work better for your specific situation, call or text me directly. Our info is in the description below, and I will walk you through exactly how to position your next deal for the best possible prices.
If you want to learn how to use financing to grow your portfolio, check out my DSCR loan tips and tricks playlist. Inside, you'll find powerful strategies, lender insights, and real-world tips to help you close more deals and maximize your cash flow.